All right, hello, folks. We're here to chat with a couple cool folks that we have here that are going to help you guys not only sell your business, but save a bunch of money doing so in the process. We've got Steve Stallcup on the line and Ed Lyon, who is our resident tax attorney. So we're excited to have you guys here. Thank you for joining me today. How are you guys doing?
Very good. Thank you for having us.
I'm rocking and rolling.
Today, we want to talk a little bit about our partnership. We've gotten together at Devoted Pawn Consulting with Steve Stallcup and his group because there's a large need for folks that are trying to sell their business, and oftentimes they don't know where to go. And so I want to talk a little bit to Steve first and kind of let him explain, who he is, what he does, how he helps you sell your business. And then we'll kick it over to Matt and talk about all the tax savings that he can help you save in that process as well. So welcome, Steve. Tell us a little bit about who you are and what you do, bud.
Yeah, absolutely. Thanks, Vern. Thanks for having me on the call. So it's Stallcup Group. I founded this company in 2009 I've been in the industry for 34 years in the pawn shop industry, and most of that time was various positions, mostly operational, for 23 years with Cash America. And in 2005, I started in the M&A side. 2005 to 2009, I was the buyer for Cash America. So I learned a lot about the transactions on buying stores. As you know, Cash America is the biggest provider in the industry, and they have to go out and buy earnings. They're a publicly held company, and they need to buy earnings, and that ebbs and flows. Their motivation to do so kind of ebbs and flows depending on the need for earnings, because their demand is so high. And so I learned a lot on the buy side. And in 2009, with the credit crunch, they downsized, and my position was eliminated, and I started the Stallcup Group, and we exclusively represent sellers now in the same industry, exclusively in the pawn shop industry. And so it's a very fragmented industry, 10,000 pawn shops roughly. About 15% of those are occupied by the publicly held, the traded companies, Easy Corp, Cash America, and then there's a couple of other private providers that are fairly large, 50 to 60, 70 stores. And so we market to the sellers, folks that need valuations for their pawn shop companies, and it may be on the fence of selling. Talked about it before, their spouse, and they're not quite sure. Then others may have a life event that happens that they definitely need to sell, and there's a timeline involved. So we handle all those scenarios. We value the pawn shop. We negotiate the sale of the business with the buyer. We get multiple buyers engaged. We negotiate the real estate involved, whether it's a sale or it's a lease scenario. And so this recently, when we started this partnership, with the tax strategy with Gravity, it's one of those things where we've had a lot of folks, a lot of companies, sellers that come by that we just can't get to their purchase price, and we know that we can't up front. It's could be a soft market. Really, the sellability of the company has a lot to do with that, whether it's the state that they're in or lower pawn rates. Therefore it's not as high demand as say Texas, Tennessee, or Florida. And there's a gap that you have to bridge in terms of valuation. So this tax strategy allows us to do that, and that's what we're excited to talk about today. And we can go back through some of those folks where we tried to sell before and they just couldn't get the money that they wanted, or in fact it's new. It could be a new client that's ready to sell, and they could be in one of those states that are really a good pawn rate state, but they're in a market that's not attractable to the publics or to the big aggressive buyers. And so either way, we're very excited about bridging that gap on valuation and bringing these companies to sale and finally close. So we're going to talk about that today, and we're very excited about the opportunity of being able to service and satisfactorily close many of these transactions that we haven't been able to, or that might be a challenge in the future.
Yeah, and I think that's an important point that you brought up. I mean, it's definitely not like it was in 2010, 2011, 2012 when, these pawn shops were fetching top dollar, right? I mean, things have changed a lot since then. Now, our job as a consulting firm has always been to help our clients get the top dollar for everything, maximize their cash flow, maximize their profitability, teach them how to make that sustainable and add new product lines if needed or new services. And to me, this is the perfect complement for it, whether they're going to sell in 1 year or 5 years or 10 years. People need to start thinking about this strategy and understanding, what the end game is. And you mentioned soft markets. I mean, we always have seen it's harder to sell something in California because of the low interest state. The big dogs won't go in there. The large public chains won't go in there. But there's still some great value in those shops. How do we help them see that value and protect as much of the profit as we can? So I'm with you. I'm excited about that.
Yeah, no, I was going to say there's other states like California, there's New Mexico, there's Ohio. There's a large portion of the United States that has those states that are challenge states. They're in their state legislature trying to raise them incrementally, but it just takes time. They're so far back there, but they're absolutely solid cash flowing pawn shop companies. And so you're not going to get your 6 and 6.5 multiple on EBITDA on store level earnings, like you normally might be able to get in a very robust marketplace. So that really will help bridge the gap, and we're excited about that, where we can make a transaction for what is really a solid company. It just happens to be in one of those states. I think, like you said, it's getting more difficult in this industry, with the gold that fell off for a long time and the customers didn't have that collateral with them. And now we see a little bit of relief on the gold price, but there's still the very serious and palpable lack of volume of gold. So it's just tougher business there's more competition with the product, although there's still a demand for loans. So all those things combined, I think that anytime you can realize tax plan liquidity, and it throw that in the bucket with regard to what you're getting for your business, it's going to make for a bigger, better picture on the exit strategy. And we're gonna put some of those to test, Vern.
Yeah, and I think it's going to be great, and this is a great segue to talk with Ed. Our guys, our customers have known Matt. Obviously, we've been talking with Matt since before the Pawn Conference, and we brought Matt and Ed, his partner, in to talk about tax savings, and that was a huge hit. And of course, since the conference, we've had a lot of people, working with Matt from our team saying, how can I take advantage of those tax savings and save money in my pawn shop and personally? And we're going to take that to the next level. We've got Matt's partner Ed on the line, and he's going to talk a little bit about, from a tax attorney perspective, why it makes sense to even think about taxes or to deal with someone like him, prior or during the sale of your business, because I think most people think about that as a secondary thing after the fact, and they think, oh man, I really screwed up. I could have saved a lot of money. We want them to talk to Matt and Ed prior. So welcome, Ed. We're glad to have you here, and we want you to talk a little bit about, first kind of who you are and what you do, and then also, answer that question for us. Why does it make sense for these guys that are preparing to sell, right now or in the near future, to have a conversation with you guys before, during the sales process?
So I run an organization called the Taxmaster Network. We are currently over 300 CPAs, enrolled agents, and financial advisors who work with clients from a focus of paying less in tax. Every financial decision you make, even if it's just buying a pack of chewing gum at 7-Eleven, is going to involve some sort of a tax consequence. So taxes permeate all of those financial choices. Our philosophy is that you have to incorporate tax planning into the decisions before you make them. So we work with advisors across the country. I have a long-standing relationship with Matt Pearson personally, and he is the entree into the pawn market, which has been eye-opening for me. It's a neat business. There's some neat opportunities to do some really good things for some really good people. And so it's a group of business owners who face some specific challenges. Now, pawn owners work really hard to build decent, legitimate businesses in a tough regulatory environment. They are demonized, and they work really hard to build a business. When it comes time to exit that business, You sell a business, maybe you've done very well for yourself. You get $1 million, $2 million, $3 million for that business, and you think you're in great shape, and you are. You are. It's the biggest payday of your life, but it also suddenly turns into the biggest tax bill of your life. And those taxes can reach well into 6 or even 7 figures. Uncle Sam, and particularly your state government, if you're in a high tax state like California, the state has been busy telling you that you can't charge interest for your clients. They've been busy imposing all sorts of money service business regulations on you. They've been making life difficult for you. And then when you sell, all of a sudden, they're your best friend. They've got their hand out, right? My goal working with pawn business owners is to find legal, moral, and ethical ways to make that tax bill go away, minimize that tax bill, or push that tax bill as far off into the future. And that way you can have the use of the proceeds of your business yourself. Now, you didn't build the business to enrich the government that has made life harder for you. You built the business for yourself, for your family, for your legacy, for the charitable organizations that you support. And certainly the membership of Devoted Pawn gives back. So that's the fundamental premise. And what we do is we look at the client, we look at the business owner's circumstance. How much are they getting for the business? What sort of tax bill are they looking at? How are they structuring the sale? What do they want to do with the proceeds? How do they want to be financially remembered? And then we look at a number of different strategies that can mitigate the taxes on the sale and figure out which strategy is most appropriate for the seller. And in a lot of cases, we're looking at more than just one strategy. So there are some particularly valuable opportunities that might work for one seller, but not necessarily for another seller. So it's our job to identify the opportunities and help the client work through which of those opportunities are going to be most valuable for them and their family. A lot of the strategies that you teach members of the association, a lot of the vendors who come into the association, the primary focus is increasing current income. So you've got two different strategies, two different umbrellas, two different buckets of ways you can make more money. You can make more, that's financial offense. You can spend less, which is financial defense. And you've got strategies and you've got vendors in your world who help your members do both. And that's great if you're taking home more money. And that's an immediate benefit, and it's a wonderful benefit. But what happens down the road, and it may not be so obvious because it's not such an immediate benefit, is when a pawn owner takes advantage of these strategies, whether it's financial offense or financial defense, they're also making their business more valuable. They're increasing the value of their assets. So when it does come time to exit the business, they've got a more valuable asset. They've got a bigger tax problem. So again, it all comes down to the value of planning. And I can't tell you how many times I've had clients come to me, not necessarily in the pawn industry, but come and they say, okay, I sold my business. I'm looking at this huge tax bill. What can I do? I worked last year quite extensively with a family that sold a business for $32 million, and $30 million of that was taxable. And they said, okay, we got this tax bill on $30 million worth of income. What can we do? It's like, well, there are some things we can do. And there are some things that we did do and help them save millions of dollars in taxes. But we could have saved millions more if they had planned properly before the transaction.
And I think that's huge. And I want you to chime in here, Steve, too, because you touched on this, prior. One of the things that you had mentioned was, maybe if you're trying to sell your pawn shop, or you got 3 or 4 stores, and you're looking at, hey, I need $5 million to net out the dollar amount that I want to walk away with, but the buyers are really only looking at paying 4 million. Now we're in the ballpark because we could probably save that other money on the tax side, and everyone leaves happy, the buyer, the seller, and Steve, who's able to close the deal and get you that buyer. So, what is your response to that, Steve? I think that there's a great tie in there as well.
Oh, definitely there is. So, for example, I mean, most of the time that when we engage customers and we go down the path of the exit strategy process, Stallcup Group will exceed the expectations, the price expectations, beyond what they thought they were going to get, but not always. Sometimes when we go out and we try to sell a business, and many times it's beforehand. I'd look at all of the data. We do the financial, competitive, and demographic analysis for the business, and say, well, we think your business is going to be worth in this range. Probably, maybe a little less than 10% of the time. This could be a big company, could be a chain of 12, 15, 20 stores, could be a single store. And they say, well, you know what, my company's worth more than that. I hear that sometimes. My business is worth more than that. Well, what they're saying is they're saying it's worth more than that to me. I can't sell it for what you're saying that the business may be worth. And it's really ultimately, like anything else we sell, it's worth what someone's willing to pay you for it.
Yeah.
Right.
Regardless of that intangible, nebulous, what it's really worth is very subjective. Now, we can use comps and all sorts of data to support our pricing. But ultimately, I'm not going to tell someone that the business is worth X and then later on it's not in that range. I'll be very realistic with the range that I give them, and sometimes it's just not enough. But if we can actually, like you're saying, deploy some of these tax strategies, where there's a tax plan liquidity program that mitigates that softer price than they expected, then there we have a deal. That deal will work, and all of a sudden you've made your company much more valuable, much more sellable, and not only just to the primary buyer that may have been slightly interested before, but you've opened the door to 2 or 3 or 4 other buyers, which obviously that increases the sell position when you have a feeding frenzy, so to speak, or where more qualified buyers are interested in your business. You've just opened the door to more potential candidates now that your price may be $18 million instead of $20 million, because you're going to benefit greatly on the tax strategy side. And then also, by having more buyers that are now focused on your company, it will probably allow us to get a better position on the real estate, whether that's a longer-term lease, better options, triple net, whatever it may be. So it really is a benefit to have that extra horsepower, in the engine when we're needing it in some of these situations, when those price expectations are off a little bit with the seller, the owner.
If you're close, we can close the deal now with you, Steve, and get the pawnbrokers the money they need, but also help them save on the tax side. And I would bet, from talking with Matt and what I know about him, I would bet that Ed would echo that and say, not only can we help you there, but in the next, 2 to 3 years between when you want to sell and now, let's also take a look at your taxes and save you some money on that side of it, right, Ed?
Absolutely. Absolutely. We can save money during the operational phase of the business, and in fact have worked with members of the association to do exactly that. And then we save money when the client sells the business. And believe it or not, pawn shop owners are going to reinvest the proceeds when they sell the business into something that makes them money. We can even help save taxes then.
Yeah, I want to say that I'm very excited about this opportunity to get in, and where, when you have 10,000 potential clients that are out there, operators, then most of those are private. Just think about that they're not publicly held. It's not like we can have a changing of the guard and a succession plan. There's some point in time when most of those stores are going to need to sell. They're not going to do this forever. They're not going to want to do it forever. And so, being such a fragmented mom and pop type of an industry in terms of privately held businesses, this is a perfect opportunity to close more of these stores, more of these opportunities, which this sounds kind of like a sterile number that we're closing more deals. It's really what it means is we're completely satisfactorily helping the close of this season of someone's life where they've had these stores, this 1 or 2 or 3 or 5 store chain that has been a challenge for them to sell, and really the unknown when they talk about it together about selling and what the liquidation, whether we liquidate or we sell to an actual buyer that retains our real estate, that's always an unknown. It's never known until you do it. But if you have a better success rate, better potential plan to close and successfully transition someone into a different phase of their life. It's just a wonderful thing, and we're excited about that because there's a definite need in this industry with so many, such a fragmented mom and pop industry.
And I agree. We see this as a stressor for a lot of our clients. When we come in and we do consulting with them, one of their biggest stressors is their children don't want the business. They don't want anything to do with it, or they don't have any children to pass it down to. And they're really stressed. They're like, I can't sell this business. I don't know how to sell it. I'm not going to be able to sell it. Well, now you can. We've got an opportunity and a way for you to not only sell it, but make more money than you probably ever would have in the past prior to this relationship happening currently.
Well, I want to echo what Steve says. People don't build a business just for the numbers. Now, you tend to think of accounting and law as the numbers, but there's an emotional meaning. There's somebody's life behind all of those numbers. So when you sell your business, it's not just to create assets. It's not just to get dollars. It's to free yourself up to travel or spend more time with your family or spend more time volunteering in your community. And the tax planning that we do doesn't just put more dollars in somebody's bank account. It creates opportunity in their life. Think back to what I said 20 minutes ago. Every financial decision you make involves taxes. Every financial goal that you have faces friction from taxes. And when you reach the point in your life when you're ready to step out of day-to-day business operations, one of the biggest frictions you're going to face is the IRS and the state tax collector with their hands out ready to take a piece of your business. So my job isn't just to get clients more money. My job, and the really rewarding part of what I do, is to help clients accomplish their goals in life by minimizing or eliminating that friction from the tax collector.